प्रेजेंटेड बाय eBix कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Market extends gains for the second straight day. Sensex reclaims 60,500. Financial and IT stocks gain. Lackluster response to the historic Paytm IPO on the first day. The 18,300 crore rupee IPO has been subscribed only 18% on day one. Data breach at CDSL's KYC arm, CDSL Ventures. Over 4 crore Indian investors' personal data like DMAT and PAN card details leaked twice in 10 days. IndusInd nosedives over 10% amid reports of its microfinance arm dishing out evergreen loans. The bank refutes whistleblower claims, says 84,000 loans disbursed due to technical glitch. Touted as India's reply to TikTok, Chingari, the short video sharing platform, has raised $40 million from its crypto token Gari, and that too in just 24 hours of the live sale. Indian equity benchmarks, the Sensex and Nifty, recovered intraday losses in a volatile session to end stronger on Monday. Sensex was up 0.8% at 60,545, while the Nifty was also up by about 152 points to 18,068. Gains in financial and IT stocks pushed the indices higher. Top gainers on the Nifty were Titan and IOC, up about 4.5% each. Bajaj Finserv, Ultratech, Tech Mahindra also seeing gains in trade. Broader markets surged, aiding investor morale, with the mid-cap and small-cap index ending more than 1% higher each. Top laggards today: IndusInd Bank, Divi's Labs, M&M down 1.3%, SBI and Hindalco also seeing some amount of cooling off. Let me welcome in our global business editor, Udayan Mukherjee, to get a take on the markets and the kind of direction that we're headed in. Udayan, off to a good start this week, even though the Paytm IPO first day subscription numbers were somewhat lukewarm. But we're also in the thick of earnings season now, and perhaps the market's attention is focused there.
Well, it's been a good start, Abha, post-Diwali, I would say, because pre-Diwali you would remember that the market was beginning to lose its way a little bit from that top of 18,500 on the Nifty. It had pulled back somewhat, raising fears that we have entered a slightly deeper corrective phase. But I think the markets bounced back well post-Diwali, back to those 18,000 levels. And I think the next couple of weeks will be very crucial for this market because, as you said correctly, there's so much excitement around Paytm. It's going to be a marquee digital listing. And often around these kind of listings, the markets move one way or the other. I mean, they could really feed off the excitement and pierce past the previous peak and make a new top. Or it could be, it has also happened in the past that around these listings or new IPO listings where there's so much excitement, the market will actually make a near-term top. It has happened in the past. So I think the Paytm issue and how it lists and where it goes from there, I think maybe an important cog in the wheel in determining what the near-term direction for this market is. So I think the answer to that question that we've both been talking about, and whether we have made a top for the year or we are actually going to be getting to higher places before the year is out, I think will be resolved in the next couple of weeks around the Paytm listing. I'm watching with great interest.
All right, fantastic. And of course, we'll be joined shortly by our market guru of the day.
Hello and welcome to this Business Today Market Special. I'm Udayan Mukherjee. With me is my co-host Abha Bakaya, and our guest for the show today, Vetri Subramaniam, Chief Investment Officer of UTI AMC. Vetri has been a very successful fund manager for several decades, more than 2 decades, and he runs nearly 1 lakh crores of equity money at UTI. Vetri, it's good to see you again, and thank you very much for joining us on the show today. This week it's all about digital, because there's the Paytm IPO and there is so much excitement in the run up to that, and Nika after that. So, with all this going around in the digital space, how are you, an old time fund manager, aligning yourself to these new kind of companies which are coming up? What's your approach?
Well, Udayan, the fun thing about this is that every few years you always have a new set of companies come to the market. And of course, they bring their own paraphernalia, they bring their own, sort of terms that they want you to understand. But the good thing, as we've seen so many of these cycles, and I've certainly seen quite a few, is that eventually it comes down to some, basic fundamentals in terms of the company's ability to generate cash flow, in terms of its ability to eventually generate a, healthy return on capital employed. So I think as long as you're able to take all those new terminologies that they throw at you and convert it back into the terms that we are most familiar with, it's a process of evolution. And we'll continue learning some new tricks as well. But I think if you can connect it back to the basics, which is what all investing should be, then it's not so difficult. I think the bigger challenge, Udayan, is not so much the new terminology. It's really to do with the fact that today in some of these businesses and their, sort of equally evolving business models, we are having to look way out into the future to sort of ascertain the value of these business franchises today. And I think therefore, our thought process is really to tread lightly, to proceed with caution, not to ignore these new business models, but to sort of take very pint-sized bets and to take them only in a limited number of names. I think the rest we'll just continue to learn along the way in terms of, how these business models actually scale up. But I would say go back to the basics. The terminology is irrelevant. Eventually, it's all about cash flow and return on capital.
It's an interesting point that you make, because I was just talking to the chairman of one of the largest financial services companies in India, and he made exactly the same point, that while the excitement is great, many of these are actually distributors who will not end up making a lot of money because they don't manufacture the product. They're getting together a lot of people on their platform and maybe distributing some products to them. But do you share that view, or in that sense, would you be skeptical that once the excitement of private equity capital has played out, many of these in 5 years' time would actually not be generating the kind of cash which you need to sustain valuations?
I think without doubt, Udayan, that is a significant risk. I also think we'll have to, keep two sort of thought processes at play simultaneously. One is that there are certain businesses that have perhaps technology didn't exist to enable them 20 years ago, or even 10 years ago, or 7 years ago. But today the technology enables those business models, and they are creating or delivering something of value to the consumer. I think as you move towards the fintech side of it, is where I think it starts to get slightly more challenging, because you can see the fact that they're creating a lot more touch points with consumers. But what is not clear to us over there is that where does the value of that consumer or customer actually lie? And I think what we are seeing gradually evolving here, Udayan, is that in the fintech space in particular, eventually, in my opinion, it goes back to the ability of the financial entity in terms of its capital base, in terms of the cost of its liabilities, to be able to manage risk well. I think too many fintechs are, coming or looking at this business model as something where they've got the customer contact and tomorrow they can leverage it into lending businesses. And the history of everything that I've seen, going back to, in fact, all the way back to the mid 90s, Udayan, when you had the first flush of NBFCs come to the market, is that being able to access customers and raise liabilities is not enough. You've really got to be able to be competitive in terms of the cost of your liabilities, which means you need a strong liability franchise. And that's much, much harder to get as compared to getting the customer touch point. Maybe some of these business models will also have to become partnership models. We've seen one or two companies go down that route, clearly saying that we can originate the customers, but we don't have the liability franchise, we don't have the credit models to lend to them or take that degree of risk, and therefore we'll partner with them. So we'll have to see how this model, sort of plays out going ahead.
And don't forget to watch the whole interview on businesstoday.in, our special conversation with market guru Vetri Subramanian. The Paytm IPO was subscribed 0.18 times at the end of the first day of subscription. Retail individual investors' portion subscribed 0.78 times, and the QIB was subscribed 0.06 times. Non-institutional investors' portion was subscribed 0.02 times. Let's take a detailed look at the Paytm IPO as we dive into the technicals and fundamentals of the company.
I can't believe a master stroke for black money that could have been taken. It takes a bold man. It takes a person who's ready to let go of every advice but take a single shot.
That was the day Prime Minister Narendra Modi announced demonetization. The very next day, Paytm had this ad on the front page of major newspapers, thanking the Prime Minister for the bold step. Now, on 8th of November 2021, 5 years to the date, Paytm received a super lucky boost which propelled it into the major league. The company has gone public. Going public to raise 18,300 crore rupees in what is the biggest IPO of Dalal Street. The struggle is, however, not yet over for Vijay Shekhar Sharma, who founded Paytm in 2010. The biggest challenge he faces are skeptics who say the IPO price band of 2,080 to 2,150 rupees is too high. The company continues to bleed money. In 2021, it posted a loss of 1,071 crores on revenues of 3,186 crores. The enterprise value to sales ratio is 46.1, considered to be very high. However, SoftBank, one of the earliest investors in the company, has said it is confident of the public issue's success and its valuation. A confident Vijay Shekhar Sharma had also dismissed all doubts in an earlier interview with Business Today TV.
So we deliberately chose a lower price, which is incidentally in your context a high price, while we from the anchor roadshow that we did were able to see demand at a much higher price.
The second big criticism Paytm is facing is that out of the 18,300 crore rupee IPO, the company gets just 8,300 crore. The rest, a whopping 10,000 crore rupees, goes to existing investors who are cashing out at a huge profit. This has raised doubts in the market, something clearly reflected in the grey market premium, which is just 60 rupees currently. Bureau Report, Business Today TV.
The subsidiary of India's top securities depository, CDSL, has exposed personal and financial data of over 4 crore Indian investors, twice in a period of 10 days. However, CDSL Ventures claims to have fixed a vulnerability in its systems that could have become a potential target for hackers. How do these cyber attacks affect you and the millions of Indian investors out there? Let's find out.
If you invest in stocks or mutual funds, then you have definitely undergone KYC, and there are good chances your KYC was done by CVL, a subsidiary of India's largest depository, CDSL. The records of this biggest KYC registry agency in India has been exposed, leaving your personal details in the hands of hackers. A Chandigarh-based cybersecurity startup CyberX9 reported the vulnerability on 19th of October to CDSL, and the securities depository took around 7 days to fix it. The database was hacked again on 29th of October. CDSL was informed a day later and the vulnerability was patched on the 1st of November. However, in the meantime, extremely sensitive personal and financial data of over 4 crore Indian investors had been leaked.
CDSL is the biggest depository of India, holding more than 5 crore demat accounts, and the data belongs to 4.39 crore people. It's a huge data, and it is the biggest financial data of till date any company or any organization has exposed it.
The exposed data includes some very personal and sensitive information. Investor name, PAN number, gender, marital status, date of birth, nationality, residential address, contact number, and email address. All information which is a gold mine for fishers and scammers. The sensitive personal and financial data exposed to massive numbers of people can lead to things like financial fraud, identity theft, as well as exposing people to extortion, targeted attacks, and income tax refund scams.
Anything is possible. Takeover of internet banking accounts and takeover of demat accounts, possible forgery of identity theft, and the biggest is Indian financial market is at risk.
This was once again a case of sheer negligence by CDSL in security-sensitive client data. Bureau Report, Business Today Television.
Shares of IndusInd Bank slumped in trade today. The stock tanked over 10% after whistleblowers raised concerns over the bank's microfinance subsidiary giving out evergreen loans worth thousands of crores since the COVID outbreak. The stock tumbled even after the management termed allegations of evergreening as inaccurate and baseless. IndusInd Bank said its subsidiary disbursed nearly 84,000 loans without customer consent due to a technical glitch. Refuting allegations of evergreening those loans, the bank said all loans managed by BFIL are fully compliant with regulatory guidelines. The Government of India is ready to procure 1 crore doses of the Zycov-D vaccine developed by Cadila Healthcare. This is the world's first plasmid DNA vaccine. Cadila will be supplying the vaccine to the government at the rate of 265 rupees per dose. Along with the vaccine, Cadila is also offering the needle-free applicator at 93 rupees per dose, excluding GST. The pricing has been decided in consultation with the Government of India. Startup firm Chingari was founded 3 years ago in November 2018. It competes with the biggest global brands in the short-form video space. The company raised $19 million from over 30 venture funds and individual investors a month back after putting in a lot of work on the fundraise. And then something magical happened. In less than 24 hours around Diwali last week, Chingari said it had raised $40 million from the public sale of its Gari token. Here's the story of a fundraise that has surprised many.
It's proven to be true to its name, literally. Chingari, a short-form video app that hopes to compete with the likes of Instagram Reels, YouTube Shorts and others like MX Takatak and Josh, has set the nascent world of crypto tokens and crowdfunding ablaze with a whopping $40 million fundraise in 24 hours last week. On 2nd November, Chingari had scheduled its first public sale of Gari, the crypto token that the company had unveiled at a public event earlier with film star Salman Khan, who is the brand ambassador of the startup. Within 24 hours of going live, Gari tokens worth $40 million were sold on crowd equity platform Republic. So then what's all the fuss about a Gari token? Well, it's a way for the Chingari platform to extend itself to the blockchain world, using Solana, one of the fastest blockchain in the world. Founded in November 2018 by Sumit Ghosh, Deepak Salvi, Aditya Kothari and Biswatma Nayak, Chingari lets users download and upload short videos and shop for merchandise within the app, among other things. Chingari claims to have over 30 million monthly active users and already uses an in-app credit system called Chingari Coin. The company says it shares 30% of its revenue with creators via these credits, which can then be redeemed by creators as actual money in their accounts. Over time, the company says the Chingari coin will be replaced with the Gari token, which will operate like a cryptocurrency. Essentially, while apps like Instagram only allow creators to monetize their content by collaborating with brands and don't really share their ad revenue with influencers, Chingari is hoping to change that. Each time a user creates a video on the app, he or she will be rewarded with a crypto token. These tokens can then in turn be used to buy featured products, tip other creators, unlock exclusive content, and even vote on the future of the platform. It's a bold move by the founders of Chingari to challenge established business models in a social media world dominated by the likes of Instagram and YouTube. But there is a crypto caveat here. Popularizing crypto amongst creators in smaller towns and cities across India might prove to be a double-edged sword, especially given the growing murmurs of an impending crypto regulation in the country. Stay tuned to Business Today for more.
That's all we have time for on the show today. Thanks so much for watching.